auspicious month for doing puja and all. And for the professional, when budget comes, that is a Shravan month for us. We have to study in depth. Luckily, this time, Shravan month and budget has coincided, and we have to study deeply of the budgetary provision. As soon as budget comes, webinar and seminar starts. But we thought that now it is time to discuss in depth about the important provision, and that's why this program was organized. Ravi, please background में सब बंद कर दो Ravi. And that is the reason we have organized. And when we
पार्टी चंदन ने आज तो अंदर की बाहर की न जैसे
एक सेकंड हमें रवि anyway, please. So when we contacted other professional bodies, they readily agreed to join this in Gnan Ganga. And I'm pleased to inform you that apart from our this AIFTP Western Zone, 11 organizations have joined this webinar. They are Goods and Service Tax Practice Association of Maharashtra, and president is Mr. Mahesh Matkolkar. If he is present, you can just say hi, Matkolkar ji. Then Gujarat, yeah, thank you. Then Gujarat State Bar Association from Ahmedabad, Advocate Shailesh Makwana ji is there.
Yes.
Oh yeah, yes sir, Shailesh bhai, yes, welcome sir. Then Maharashtra Tax Practice Association, President Prasad Deshpande is there.
Hi, sir.
Present.
Yes, sir.
Yes, welcome, sir.
Yes.
Then All Gujarat Federation of Tech Consultant from Ahmedabad, CA Dr. Vishwesh Saha is there.
Hello.
Yes, welcome, Vishwesh bhai. Yes.
Good morning to all of you.
Good morning. Yes. Income Tax Bar Association Ahmedabad, Shri Sridhar Saha bhai is there. Then Southern Gujarat Commercial Tax Bar Association, the president is same who is the chairman of Western Zone, Shri Shashank Mithaiwala. Shashank bhai. Yes, welcome. Then Baroda Tax Bar Association, Ajit Tiwari ji is there. Ajit bhai Tiwari is present.
मैंने दिवसे कॉफी માટે ના પાડી ને એટલે એને ટોટલી બંધ.
Bhavnagar Sales Tax Bar Association Advocate Anil Tekwani ji is there. He is also joined. Then Bhavnagar Income Tax Bar Association CA Vipul Damsania ji is there. Then Malad Chamber of Tax Consultant Advocate Jaideep Sonpal is there.
Hello.
Yes, welcome sir. And Thane Tax Practice Association Advocate Kiran Savar is there. So these 11 associations.
Yes, sir. Good morning. Everybody, good morning.
Yeah, good morning. Good morning, sir. Welcome.
Thank you, sir.
So these 11 associations have joined this webinar and strengthen our hand. Now, may I request the chairman of AIFTP Western Zone, Shri Shashank Mithaiwala, to address the gathering.
Good morning. शुभ सवार, शुभ सकाल.
Yes.
मैं अगर हिंदी में बोलूंगा तो थोड़ा अच्छा रहेगा सबके लिए.
बोलो.
गुजरात और महाराष्ट्र दोनों स्टेट के एसोसिएशन हमारे साथ जुड़े और सभी मेंबर साथ में. तो
Yes.
फर्स्ट ऑफ ऑल वेलकम टू ऑल ऑफ यू. आप सभी का स्वागत है. गवर्नमेंट श्रीमती निर्मला सीतारामन जी ने, हमारे फाइनेंस मिनिस्टर ने 2024 का जब बजट दिया तो इसमें बहुत सारे प्रावधान ऐसे बनाए हैं कि जो डायरेक्ट और इनडायरेक्ट टैक्सेस से रिलेटेड है और हमारे सभी करदाताओं को बहुत इफेक्ट करते हैं. तो उसके हम लोगों ने आज एक वेबिनार का आयोजन किया है ऑल इंडिया फेडरेशन वेस्ट जोन ने. तो उसके साथ ये फेडरेशन का ये प्रोग्राम है. उसके साथ गुजरात और महाराष्ट्र के 11 और एसोसिएशन भी साथ मिलके ये प्रोग्राम कर रहे हैं. तो मुझे खुशी की एक लहर है मुझ में कि भाई हमारा वेस्ट जोन का एक ऐसा अच्छा प्रोग्राम हो रहा है जो सबके लिए अच्छा है। और वेस्ट जोन का इंटेंशन भी ये है कि हमारे सभी मेंबर्स को कायदे में जो कोई भी चेंजेस होता है प्रावधान में, उससे हम हमारे मेंबर्स को अपडेट कर सके। तो इसी आशय से वेबिनार का आयोजन किया है। उसमें आज हमारे साथ और गर्व की बात यह है कि ऑल इंडिया फेडरेशन के हमारे नेशनल बॉडी के भी सारे सदस्य आज हमारे साथ जुड़े हैं, जिसमें हमारे नेशनल प्रेसिडेंट श्री एडवोकेट श्री नारायण जैन जी सर, डेप्यूटी प्रेसिडेंट एडवोकेट श्री समीर जानी सर, वाइस प्रेसिडेंट विनय पाटकर जी, सेक्रेटरी जनरल श्री आर डी काकरा जी और जॉइंट सेक्रेटरी श्री गिरीश राठी जी भी हमारे साथ जुड़े हैं। मैं आप सबका स्वागत करता हूं। ऑल इंडिया फेडरेशन के सभी मेरे होद्देदार, मेरे कमेटी मेंबर और सभी फेडरेशन के सभी मेंबर्स का भी मैं हार्दिक स्वागत कर रहा हूं। और आज के इस वेबिनार में हमारे साथ जो 11 एसोसिएशन जोड़े, वो सभी एसोसिएशन के ऑफिस बेयरर्स और मेंबरों का भी मैं स्वागत कर रहा हूं। और खुशी की बात तो ये है कि आज हमारे साथ जो दोनों स्पीकर जुड़े हुए हैं, जो हमको डायरेक्ट और इनडायरेक्ट टैक्सेस के बारे में बजट में जो इम्प्लीमेंटेशन होने वाले हैं और जो करदाता को जिसका असर होने वाला है, वो हमारे उसके बारे में हमको जानकारी देने वाले वो हमारे दोनों लर्नेड स्पीकर, एक तो हमारे सूरत से है और ऑल इंडिया फेडरेशन के 2022 के चेयरमैन भी रह चुके हैं, ऐसे सीनियर मेंबर सीए श्री नीतीश भाई मोदी का भी स्वागत करता हूं। और हमारे दूसरे स्पीकर है जो भावनगर से है, जो खुद एक ऑथर भी है, उन्होंने जीएसटी और इनकम टैक्स के कायदे पे कई बुक भी लिखे हुए हैं। तो एडवोकेट श्री भरत भाई सेठ का भी मैं स्वागत कर रहा हूं। और सबसे खास बात, ये जो हमारा आज का कार्यक्रम है उसको कन्वीन करने वाले हैं हमारे ऑल इंडिया फेडरेशन के इमीडिएट पास्ट चेयरमैन एडवोकेट श्री अश्विन आचार्य जी, उनका भी स्वागत कर रहा हूं। तो मैं आप सभी का तहे दिल से फिर से स्वागत कर रहा हूं और ज्यादा समय न लेते हुए अश्विन जी को ये वेबिनार की कार्यवाही आगे ले जाने के लिए रिक्वेस्ट करता हूं। थैंक यू।
Thank you, Shashank bhai. Now may I request the President of Goods and Service Tax Practitioners Association of Maharashtra, Shri Mahesh Matkolkar ji, to say a few words.
Yes, thank you, Ashvin Acharya ji. I welcome all the associate bodies who have joined hands together for this mega event. After taking charge, myself, our secretary, joint secretary Jatin Bhai Chheda and Monaj Bhatt, we three members from GSTPM have actually visited Parliament, and we had seen live budget from the gallery of our Parliament. This is first thing. And then we have given our submission on behalf of GSTPM to the Finance Ministry. We had been there, we had submitted them. And then we realized that the importance of budget. When we see from the gallery, we could see all the reactions across 550 above members at a time who are the members of Parliament. There is an opposition as well. Any proposal is moot, opposition also are there. But then I realized one thing, that at that moment, after any of the amendment or any of the suggestion, any of the clause spelled by the finance minister, none of the members are in a position to understand that instantly. So that it remains very important part of all the associations. And I'm sure that the most of the Surat and Gujarat associations are very well equipped to give the representations. So the role of representation is most important. Rather, understanding, we are the first person to understand budget very well, and there has to be a good representation. And we had seen the importance of the representation. One or two clips we have seen that, and virtue of that, there is going to be a sea change in budget, especially capital gain, then 12.5% long-term capital gain, and indexation all of a sudden is there. So that is there. So my humble request to all the associations to join hands together for representation, because for our practitioners, the most important thing is that ease of doing practice. Let those who are doing ease of doing business, but as far as we are concerned, tax professionals are concerned, we should have the ease of doing practice. Our health, our family, that is the most important thing. And yes, ethics, we would like to see that all our members are doing the ethical things so that we will achieve greater and greater heights. Thank you very much for all. In fact, we had one orientation program, 2 days orientation program organized across Maharashtra. People at Uttan, Keshav Srishti, and many more than 11 past presidents have present. All our managing committee office bearers were present, and we had invited all the associations, district associations, and we heard and we have interacted each other, and we had planned for entire year. During that meeting itself, within 15 days, our entire plan is ready. And even, in fact, since Gujarat associations are there, we would like to extend hands with them. We are organizing Gujarati coaching class in Gujarati language. All speakers are speaking in Gujarati language. And we would like to see that it will be in the month of October. We would like to see that all the staff and members should get the opportunity to go through entire coaching class so that they will be well equipped in GST, and they will be the guidance, they will be the supporting force to your individual association, individual organizations and chartered accountants or practitioners, as the case may be. With this view, I'm very thankful to AIFTP, National and Gujarat, all associations for giving me the opportunity. Thank you. Thank you very much. Jai Hind, Jai Maharashtra.
Thank you, Mahesh Matkolkarji. We really appreciate your effort and, visiting New Delhi and attending in Budget Live. We really appreciate. And, this is very important. And just like a cricket match you watch in your home and the stadium makes a lot of difference. You can feel the energy there. So we really appreciate. And yes, all the association will be joining, giving support. And thank you for your efforts. Now, may I request the president of the Gujarat State Bar Association, Advocate Shri Haresh Bakwana ji. Haresh bhai, प्लीज अनम्यूट कीजिए आपको।
अनम्यूट करना पड़ेगा।
यस 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 आ रही है अभी आवाज आ रही है?
हाँ आ रहा है सर।
ओके ओके गुड मॉर्निंग टू ऑल।
गुड मॉर्निंग।
AIFT के वेस्ट जोन के चेयरमैन श्री शशांक भाई मिठाईवाला एंड ऑल आवर ब्रदर्स एसोसिएशन के प्रेसिडेंट सेक्रेटरी और सब यहाँ अपने उपस्थित इस वेबिनार में सबका स्वागत है। सबसे पहले तो मैं धन्यवाद करना चाहता हूँ भाई शशांक मिठाईवाला का कि जो उसने ये 11 एसोसिएशन के साथ जुड़ के ये जो एक प्लेटफॉर्म खड़ा किया है और एक बोलते
आप म्यूट हो गए सर, अनम्यूट कीजिए शैलेश भाई।
यस
हाँ यस यस यस
आ रहा है ना?
यस सर अब आ रहे।
ऐसा कार्य किया है उसने जो सबका साथ सबका विकास जैसा शशांक भाई ने सब काम किया हुआ है। 11 एसोसिएशन को इकट्ठा करना वो ये बड़ी बात है। और ये जो दोनों स्पीकर है अपने मितेश भाई और श्री भरत भाई, उसके नॉलेज का जो अपने को शेयरिंग मिलने वाला है जो बहुत ही बढ़िया है। और ये जो अपना जितना भी एसोसिएशन है उसके सबका अपने मेंबर्स है उसको ये बेनिफिट मिलने वाला है। तो ये बहुत ही बढ़िया काम किया है। ऐसा सबका काम होना चाहिए। और ये महाराष्ट्र से जुड़े हुए और या गुजरात से सब जुड़े हुए एसोसिएशन का सबका मैं धन्यवाद करता हूँ। और अपने ऐसा ही कार्य आगे भी किया जाए। और ये ऐसे अपने दोनों स्पीकर का भी बहुत दिल से स्वागत करते हैं। और सबको साथ सबका विकास से सब चले ऐसा। धन्यवाद धन्यवाद।
Very good, Shailesh bhai. Thanks a lot for the speech. Now, may I request Maharashtra Tax Practitioner Association President Prasad Deshpande ji. Prasad Deshpande ji, please. Prasad Deshpande ji, yes.
Sir, namaskar. Good morning.
Yeah.
Good morning, sir.
Good morning.
Am I audible?
Good morning.
Yes,
Good morning.
yes, yes, yes.
This respected seminar Chairman of AIFTP-WZ Zone, Advocate Shashank, Mithaiwala, sir. Immediate past Chairman, Advocate Ashvin, Acharya, sir. Honorable Secretary of AIFTP-WZ Zone, CA Akshay Modi, sir. President and office bearers of all associations. Today's faculty. All the participants present on Zoom platform and sisters, very good morning. I, on behalf of Maharashtra Tax Practitioner Association, welcome you all in the online seminar on the union budget and latest changes in the direct and indirect taxes. I am thankful to today's faculty, CA Mitesh Modi, sir, and Advocate Bharat Seth, sir, for accepting our invitations. Today, we have the privilege of learning from distinguished experts in taxation, CA Mitesh Modi focusing on direct taxes, and Advocate Bharat Seth, sir, on indirect taxes. The union budget is the concentrate on our fiscal policy, influencing economic strategies and individual financial planning alike. Through this seminar, we aim to decode its complexities with the help of CA Mitesh Modi, sir, and Advocate Bharat Seth, sir, who will break down these intricate subjects into simple, comprehensible concepts. Their expertise will provide us with valuable insights into the implications of the budget on business and taxpayers. As a practitioner in the field, understanding this nuisance is crucial for providing informed advice and ensuring compliance. I encourage everyone to actively participate, ask questions, and engage in discussion to make the most of these learning opportunities. Let's utilize today's session to deepen our understanding and enhance our professional capabilities. Thank you once again for joining us today. Let's make this session insightful and productive. Thank you very much. Over to Ashwin, sir.
Thank you, Prasad Deshpande ji. Now, may I welcome the President of All Gujarat Federation of Tax Consultants, CA Dr. Vishwesh Saha ji.
Thank you, sir.
Welcome, sir.
Good morning to all of you. Advocate Narayan P. Jain, President, sir, AIFTP, Webinar Convenor, Advocate Ashvin Acharya ji, and Chairman Shashank Mithaiwala, sir, AIFTP dignitaries of the various association, and all participants. Today's expert and my friends, speakers, Shri Bharat Seth, sir, and CA Mitesh Modi, sir, and last but not the least, all the participants. First of all, I thank Chairman Webinar Convenor and Team AIFTP, West Zone particularly, for joining to AGFTC in this webinar and Nan-Ganga. Chairman Shashank Mithaiwala, sir, has called me and invited to join, so I agree with him. In future, I also be joined in the other program also. I am CA Dr. Vishwesh Saha, President AGFTC, to inform you about the AGFTC for the knowledge of the other member other than Gujarat, but Maharashtra and AIFTP members. Some of important things may you know about it. AGFTC is the apex board of the institutional association in the Gujarat. There is a 1,700 members and 38 institutional associations across the Gujarat. Its motto to educate members in the Mofizil program, Mofizil area, where the speakers, expert faculty are not available easily. So we educate our members. Also to do a program as a bridge between the government and tax professional. We have solved tax professional and institutional associations problem about the government. As history, we have also made a 2 read against CBDT for the extension of date, and we have and Gujarat High Court is agree and directed CBDT for the follow SOP. So this is the AGFTP small organization, but for benefit of the educational members. I thanks C. Ashvin Acharya ji for joining us and sharing their knowledge about it. This Modi sir is expert in the direct taxation field. His knowledge is not now our knowledge of Mitesh Modi sir is not similar to the Gujarat, but also expert in the Maharashtra and AIFTP. So I thanks sir once again. And Bharatyal Seth sir is the from Vaishmapita of the indirect taxes in the state of Gujarat. As the time of the VAT and sell tax is there, he is the author, and I am the secretary in his leadership as the president of the AGFTC. So I thanks also him. And now, not taking much of your time, I thanks everybody, and once again thanks to AIFTP-WZ for joining us, and CA Ashvin Acharya ji for inviting us. Thank you. Happy learning.
Thank you, Mr. Bhai. Thanks a lot. Apno khub khub aabhar. Now, we will all like to hear our London National President, Shri Narayan P. Jain, who himself has written so many books on income tax. So, may I request our National President of AIFTP, Shri Narayan P. Jain, to address us.
Thank you, Ashwin Bhai. Our Deputy President, National Deputy President Samir Bhai, Samir Jani ji, the learned speakers, Mitesh Modi ji, Bharat Bhai, and our Secretary General R.D. Kakra ji, National Vice President in charge of West Zone, Shri Vinayak Patkar ji, Shashank Bhai, Narendra Sonewala ji, Girish Rathi ji, and the President and Secretaries of various joining organizations and participants. On this Saturday morning, in large number, about 167 participants are already there. I think next 10 minutes it may be around 200. So this is a good thing, and AIFTP is happy to welcome you. Friends, AIFTP has been organizing various programs, as you are aware. And tomorrow also we have got a webinar with the learned speaker, Dr. Girish Ahujaji, tomorrow at 10 o'clock. That is only for 1 hour. So I also request all the 11 associations to join, because our capacity is only 500. So better to join tomorrow at 9:45. So the link may be circulated by Ashvin Bhai and Mithaiwala ji, so that the benefit of his deliberation can also be obtained. And so far the amendments are concerned, who is speaking? Can you please mute yourself?
Mute, yes.
The children and ladies, can we have minimum discipline? Please close. You see, there were 87.
Wow.
Ravi, can you please check who is disturbing again? Please.
Mute all.
There were 87 amendments in the main finance number 2 bill, and thereafter there have been many amendments moved by the Honorable Finance Minister, and both houses of Parliament, Lok Sabha and Rajya Sabha, they have already approved the budget. Now the only formality is the presidential assent. I think in a day or two that will also be done. You see, whatever is done by Parliament, the budget has been passed. We may be not feeling happy with all the amendments. We were having some suggestions, but not all have been implemented. But then, as a tax practitioner, we have to follow the law of the land. So in the interest of our client, we need to understand everything so well, and also help our clients as well as the department, because as advocate and chartered accountant, we are also the people where the court is also High Court and all this, they also seek our help. So we need to help them in proper interpretation and implementation of law. Friends, I take this opportunity to request all of you, those who are attending, and all the associations to kindly enroll new members in All India Federation of Tax Practitioners. And now we are having concessional rate till 30th September. The concessional rate for becoming life member is only 4248 plus 1,000 rupees per year for the AIFTP journal. And let me tell you that soon, with the end of this year, the AIFTP journal will also contain the articles and material on indirect taxes, GST and all this. Because the GST magazine, which is now being published from Jaipur, the NEC has decided that that will no more be published from January. So, because the journal may be bulky, it is, and before the subscription is increased, I request you all, those old members as well as new members, if you are not subscribed for journal, please do it fast. For 3 years, the rate is concessional, that is only 2,600. So kindly do it. And after listening to our learned speakers, both Shri Mitesh Modi and Advocate Bharat Shetji, at the end, if Ashvin Bhai will require, I will speak something. So thank you very much, and I once again welcome you. And Ashvin Bhai and Mithaiwala ji, one thing more, we have now got the participant limit of 500.
Yes, sir. Thank you.
For 1 month. For the budget, we did it specially so that various zones can organize. So if the West Zone is willing to organize another webinar on different facets of the union budget, AIFTP will be happy to give the link, and you can have in next 1 week or so. Thank you.
Thanks a lot, Narayan ji. Yes, sir, thanks a lot.
Thank you.
And definitely, if you are available when both the lectures are over, then we would like to have your comments. Definitely, sir.
Thank you.
Now, before we request Mitesh Bhai to deliver his lecture, I would like to request the President of Malad Chamber of Tax Consultants, Jaideep Sonpal, to introduce Mitesh Modi. Though he doesn't require introduction, Mitesh Bhai, but still for the benefit of some other members, we may not be aware. So I request Sonpal ji to introduce Mitesh Modi.
Thank you, Ashwin sir, for giving me this pleasant task of introducing. So whenever we don't require introduction, but whenever we go through the achievements of stalwarts, we always feel grateful and inspired to have gained something in profession. So to start with, CA Mitesh Modi sir is founder and proprietor of Mitesh S. Modi and Company Chartered Accountants based at Surat and Southern Gujarat, Mumbai and Pune, Maharashtra. He's also senior advisor to Messrs. Akshay M. Modi and Associates, Surat. His areas of practice is taxation matters, income tax, service tax, GST and allied laws consultancy, audits, company law matters, project consultancy, and also regularly appearing before the income tax tribunals, mainly in practice and litigation of tax-related matters. He has also obtained first rank in BCom and was awarded with Ashwin Mehta Gold Medal by Field Marshal, late Shri Manek Shaw. Apart from that, association with all Gujarat Federation of Tax Consultants, he has been life member of All Gujarat Federation of Tax Consultants. He has been elected as managing committee member of All Gujarat Federation of Tax Consultants for the term 23-24, and further appointed as co-chairman of Direct Tax Committee, co-chairman of Membership Growth Committee. His association with All India Federation of Tax Federations. He has been elected as chairman of AIFTP-WZ Zone for the year 2022, elected as vice chairman of AIFTP-WZ Zone for the year 2021. He has been elected as National Executive Committee member in All India Federation of Tax Practitioners for Mumbai for the year 2021, 21-22, and remained NEC member for the year 2020. Apart from that, he is also a patron member of Southern Gujarat Chamber of Commerce and Industry, Surat. He is also convener of representation cell, the Southern Gujarat Chamber of Commerce and Industry, Surat, for the year 1920, and made representations on various industry issues and for professionals before the state and central government. He is also chairman of taxation committee formed in 1718 by the Southern Gujarat Chamber of Commerce and Industry, Surat. Also appointed as vice chairman of various committees for trade and industries. He is also co-chairman. He has been also co-chairman of Income Tax Committee and Managing Committee under a member of the Southern Gujarat Chamber of Commerce and Industry for the year 9, 10, 12, 13, 19, 20, and 21 and 22. He has been chairman of cooperative committee for all types of cooperative societies other than cooperative banks for Southern Gujarat Chamber of Commerce and Industry for the year 21, 22, 22 and 22, 23. His association with the Southern Gujarat Income Tax Bar Association. He's been elected as president of Southern Gujarat Income Tax Bar Association, Surat, for 2001 to 2002, 3, 3, 4, 4, 5, 5, 6, and 6, 7, and 11, 12 also. So, due to time constraint, I would like to just give the glimpse of because achievements are more than the time today we are having. So I would like to with this minimum introduction, I would like to invite Modi sir for his topic. Thank you, sir.
Yes, Mitesh bhai, now the virtual dais is yours. We are eager to hear you. Please continue.
Thank you very much. Thank you, Sonpal ji, the President of Malad Chamber of Tax Consultants. I am audible?
Yes, yes.
Thank you very much for the sweet words for me. National President, respected Advocate Shri Narayan Jain sir. National Deputy President, Advocate Samir Jani ji. Our Secretary General R.D. Kakra ji. And the convener of the program, Advocate Ashvin Acharya ji. The National Vice President for the Y Zone, Mr. Patkar ji. Other office bearers of the NEC of the AIFTP. The Chairman of the West Zone, Shashank Mithaiwala. The President, Chairman, and the office bearers of the other joint associations, particularly AGFTC, Malad Chamber of Tax Consultants, then Maharashtra Tax Practitioners Associations, Thane Practitioners Associations, Baroda Tax Practitioners Associations, and the Bhavnagar Income Tax and Sales Tax Bar Association, all other associations, including our Surat South Gujarat Commercial Tax Bar Association. I am very much thankful to the Chairman of the West Zone and all the other office bearers of the other joint associations to give me an opportunity to share my views on the significant proposals of the direct taxes in the Finance Bill 2024, especially Ashwin bhai, who told me to share my views on this very important subject. So I have prepared myself, and I will try to discuss the significant proposals. Now it is the part of the because the bill is already passed. So it is enacted in the Income Tax Act. So I will discuss mainly the newly inserted reassessment proceedings and the newly inserted search proceedings, because these are the new area required to be more studied and more focus on the newly inserted provisions under the Income Tax Act. I will cover the other amendments made in the Income Tax Act. Everybody knows the... May I continue?
Yeah, I'm telling Ravi in
there are so many discussions on the union budget, and everybody knows and understood that there is no change in the tax rates, neither in the rate of surcharge. there is a change in the TDS rates for the financial year 24-25 on the income in the nature of capital gains for non-residents. There is a change. If there is a capital gain, long-term capital gain under section 115E, the rate has been enhanced from 10% to 25%, 12.5%. Then the long-term capital gain under section 1121C into bracket clause 3, before 23rd July 2024, it was 10% rate of TDS. Now, after this date, there is no TDS. Now, on the listed shares or equity shares, STT paid shares, the long-term capital gain under section 112A, the TDS rate has been enhanced from 10% to 12.5%, and the threshold limit of 1 lakh has been enhanced to 1.25 lakhs. Long-term capital gain other than the units of UTI under section 1030C and the eligible equity shares under section 1036, the rate of tax has been reduced from 20% to 12.5%. In general, the tax rate of the long-term capital gain tax has been made at 12.5% in all the LTCG, long-term capital gain. And for the short-term capital gain covered under section 111A, the rate of tax has been increased from 15% to 20%. So this is in general. There is a great discussion required for the capital gain tax. And while in the presentation and discussion of the finance bill in the House, the finance minister has made one relaxation for the benefit of the indexation on the long-term capital gain on transfer of the immovable property, land or building, or the land or building, or the property appertained thereto. So the one more benefit is granted while passing the bill, but it is the option given to the resident Indians in the HUF and not given to the NRIs. This is very important. So with this small note, I proceed further that for the company, not being a domestic company, TDS on other income reduced from 40% to 35%. There is a reduction in the rate from 40% to 35%. Now, this is applicable from the 23rd July 2024. That is the very date of presentation of the finance bill in the House. You all know that under the new tax regime, covered under section 116 new slabs for the tax rates are introduced. Relief is given to the taxpayers covered under the new tax regime. Furthermore, the increase in the standard deduction from 50,000 to 75,000 and the family pension limit enhanced from 15,000 to 25,000, which is applicable from the assessment year 25-26. One more welcome step taken by the finance minister, that is the removal of the angel tax. As per the provisions of section 5627B, which has been introduced by the Finance Act 2012 में जो ये introduce हुआ था 56-17B, now it has been removed from the assessment year 25-26. This is very welcome step, that whatever the share purchased beyond the face value, there was this tax incidence on that differential amount under section 5627B, popularly known as the angel tax. Now there will be no tax on such transfer of these shares because these provisions are removed and will be effective from the assessment year 25-26. Now new section 44 BBC has been inserted with effect from the assessment year 25-26. That is the new provision relating to, with a reference to promote cruise shipping industry in India. And what is the tax incidence? 20% of the aggregate amount received or receivable by or paid or payable to the non-resident cruise ship owner on account of carriage of passenger, that 20% will be treated as a profit, and on that profit, the tax will be levied under section 44 BBC. That is, the presumptive tax system has been introduced by these newly inserted provisions for the cruise shipping industry. That is different from the 44BC, 44BB, that is the business of the shipping industry. Now this is the cruise shipping industry in India. These new provisions are inserted by this Finance Act. The provisions relating to the filing of the appeal before the ITAT. The time limit has been rationalized. Presently, the time limit, you know, that it is the appeal to be filed within 60 days from the communication of the order appealed against. Now the amendment has been made to subsection 3 to section 253 to the effect that the appeal to be filed within 2 months from the end of the month in which the order sought to be appealed against is communicated to the SSC or to the CIT or the CIT. Very importantly, the earlier provisions refers to the 60 days. Now the amended provisions, which has been made effective from 1st October 2024, which provides that within 2 months from the end of the month in which the order sought to be appealed against. There is a vast difference. Earlier provisions, we have to calculate the 60 days from the date of the communication of the order appealed against. Now, from the end of the month and additionally 2 months. This is the time limit to file the appeal before the ITAT. One more amendment has been made to clause A of subsection 1 to section 253 that includes the one more category of the appealable orders, that is the appeals against the order under section 158 BFA, that is interest and penalty under the old scheme of the block assessment. This is the amendment made to 253(3). Very importantly, now time limit is available 2 months plus the month, the period comprised in the month in which the order has been communicated to the SSC or to the principal CIT or the CIT. Another amendments made that is also very welcome amendment, that is relating to the rationalization of the provisions of charitable trust and institutions. We all knows that the charitable trust and institutions, particularly the institutions or the trust engaged in the educational activities or the sports activities, they are governed by the provision section 1023C. Other public charitable trusts are governed under section 11 to 13. Now there are two regimes. First regime for the 1023C and the other regimes for the charitable trusts and institutions are under section 11 to 13. The government noted this because all the provisions are similar akin to each other, and therefore now in this budget the proposals are made, and now it is in the act that the merger of the two regimes, that is the section 1023C subclause 4, 5, 7 are merged with the provisions of 11 to 13, and this amendment has been applicable with effect from 1st October 2024, meaning thereby now every trust or institution that earlier covered under section 1023C, now they have to make application for registration under the provisions of section 12AB. One more welcome step taken by the finance minister, that is the powers given to the principal CIT or the CIT for condonation of delay in filing application registration under section 12AB. If there is a reasonable cause exists for the delay in the filing of the application beyond the stipulated time limit, then now the commissioner has the power to condone and to grant the registration under section 12AB. Why this amendment has been made? Because you know that there is one provisions under section 115TD that provides for the charge to tax on the accredited income upon the trust or institutions. So if the registration is not granted for delay occurred due to the reasonable cause, there are the circumstances or situation which call for the survival of the trust or institutions, because there is a heavy tax liability upon the trust or institution for such unintended delay in filing the application for the registration, and therefore this power has been given to the commissioner for condonation of the delay in filing the application for registration under section 12AB. This is also with effective from the 1st October 2024. So on or after the 1st October 2024, the principal CIT or CIT may condone the delay in filing the application, and this is the very beneficial provision for the trust and institution. Similarly, amendments made to the provisions of section 80G24, that is with effect from October 2024, rationalization of the time limit for disposing of the application under section 12AB and approval under section 80G. Now, one more amendment made for the time limit to pass the order for granting the registration and the approval of the 80G5. What is the amendment made with effect from 1st October 2024? That is, the order shall be passed before the expiry of period of 6 months from the end of the quarter in which the application received. Friends, the earlier provisions up to this amendment was that the expiry of the period of 6 months from the end of the month in which the application received. Now the amendment to the effect that from the end of the quarter in which the application received. So the powers to pass the order granting the registration under section 12AB has been expanded. Why this has been made? Because under the faceless regime, it is very difficult to make a coordination between the application received under section 12AB or the 80G, and therefore there are chances to not to pass within the stipulated time limit. So quarterly basis, they are sending all the proposals to the principal CIT or CIT, all the records. So this amendment has been made for the 6 months limit, and 6 months limit to be counted from the end of the quarter in which the application received. This is also with effect from 1st October 2024. Friends, you know that in the TDS rates, there are so many rates: 5%, 10%, 2%, 1%, 0.1%. There are so many rates, and that creates the difficulty for making compliance to the deductors. Even in the TCS regime also, there are different rates. So in this Finance Act, the new provisions are there for the purposes of rationalization of the TDS rates, and the finance minister viewed that for ease of doing business and to make easier compliances under the Income Tax Act, these amendments are made with effect from 1st October 2024. So many provisions relating to TDS rates, 5%, that has been reduced to 2%. I take it generally because the 194D, 194D, there are so many provisions, separate provisions, which earlier provides for the TDS at the rate of 5%. Now, 1st October 2024, if payment made or credit made to the account of the payee, whichever is earlier, the rate applicable is the 2% on such payments. One more welcome change made in the Act, particularly for the salaried persons, because till date, the salaried employees, when there is a issue of TDS by their employer, they have no right to consider the amount of TCS. So the cash flows of the salaried persons are always disturbed because there are so many transactions on which the TCS has been made, and the salaried persons are not in a position to instruct their employer to consider the amount of TCS while calculating their taxable income and making TDS on salary income. So, with effect from 1st October 2024, for the salaried employees, all the TCS and all the TDS amounts shall have to be considered by the deductor. So, this is very much beneficial to the salaried person. They have to inform their employer for the amount of TCS made by the other persons or the other payers, so that their amount of TDS will be reduced to that extent and their cash flow will not be disturbed to that extent. One more important change has been made under section 194 IA. That is the payment of consideration on transfer of certain involved property other than the agricultural land if the consideration or the stamp duty value is rupees 50 lakhs or above. The rate of TDS is 1% on this amount. Now the issue is where there are more sellers or there are more buyers, the interpretation taken by so many taxpayers there, the limit of 50 lakhs is applicable to for the each buyers. So for the each sellers, and therefore, if for in the case of each seller, the limit of payment is less than rupees 50 lakhs, then there is no requirement to make TDS under section 194 IA. So this is the interpretation going on till date. Now for these loopholes, the finance minister has made the amendment to this section with effect from 1st October 2024 to the effect that the limit of 50 lakhs is applicable qua property, not qua the recipient. So if the aggregate consideration or the stamp duty value is 50 lakhs or more, even though there are recipients are more than one, the payer has to consider the aggregate amount of the transaction and to make the TDS at the rate of 1%. Now the issue is, if suppose there are 4 recipients, now the payer has to issue separate 4 certificates for the TDS. If the transaction is after on or after 1st October 2024 for the transfer of the involved property other than the agricultural land, and the value or the consideration is more than 50 lakhs rupees or above, then if the recipients are more, now the issue is to issue certificates separately. If the share of the recipients are not defined, then whatever payment made to each recipient, accordingly they have to, the payer has to deduct the tax at the rate of 1%. This is very important. So these transactions are also by and large covered under the TDS regime. The loopholes now is not available to the parties covered under section 194 IA. One more amendment made to the powers of the CIT appeals, that is the powers to set aside the appeals against order under section 144. Friends, you know that the CIT appeals are not having powers for setting aside the assessment order or the order appealed against before him, because there is the amendment in the earlier years that before such amendment of withdrawal of the powers to set aside, in the old provision the CIT appeals were having the powers to set aside the orders appealed against before him. But now for the limited purposes, the powers has been given to the CIT appeals to set aside the appeals against order under section 144. The government has observed that in the faceless assessment regime, there are so many instances that the SSC is not in a position to make compliance timely, or even not in a position to make compliance, not deliberately, inadvertently. There are so many technical issues also, and therefore for non-compliances, the assessing officer, jurisdictional AO, under the faceless assessment scheme, they passing the order under section 144, that is the based assessment or the ex-parte assessment order. This creates the unnecessary litigations, and these litigations goes up to the ITAT level. There are so many appeals pending before the ITAT challenging the order passed under section 144. Generally, the CIT appeals are not willing to consider these appeals against the order under section 144 for not making compliance for the reasonable cause or the genuine reasons, and therefore on dismissal of the appeal by the CIT appeals, the taxpayer has to approach the ITAT, and there is the bunch of appeals ITAT is used to set aside the order to the file of the AO or to the file of the CIT appeals. to reduce the burden of the litigation with the taxpayer and to reduce the burden of the ITAT and to grant one more opportunity to the taxpayer for no default on their part, this provision has been inserted with effect from 1st October 2024. That means these new provisions are applicable to the appellate orders passed by the CIT appeals on or after 1st October 2024. So any order passed after this cutoff date, the CIT appeals has the power to set aside the order to the file of the concerned AO. Notably, the powers of the CIT appeals for the set aside has been inserted in this act, not with the joint CIT appeals. There is no reference of the joint CIT appeals. The reference is of the CIT appeals only. This is very important. Now, these are the general amendments made. So I cursorily discuss with you. In my opinion, the very effective amendment made to the Income Tax Act relating to the rationalization of provisions to assessment and reassessment under the Income Tax Act. If you look at to the past history of the reassessment proceedings, particularly the Finance Act 2021, which substituted the provisions of section 147, 148, 149 and 151 and simultaneously inserted the provisions of section 148A made effective from the 1st April 2021 and subsequently by the Finance Act 22 and Finance Act 2023. The amendments were made in this new regime of the reassessment. The existing provisions of section 148 provides for the procedure of issuance of notice to initiate assessment or reassessment or recomputation under section 147. The existing provisions, you know that it is based on the information with the AO. Earlier provisions, old provisions refers to the satisfaction of the AO to believe that there is the escapement of income. Now the existing provision is based on the information which suggests that there is the escapement of income. It is the whole reassessment proceedings is based on the information. And for that purpose, the explanation 1 below section 140 is there. Explanation 2 for the purpose of the 140 is there with the concept of the deemed information, which inter alia covers the search cases of the person searched, the cases of the third person, the survey cases, and the cases of the 135. Now, the existing provisions of section 148A, which requires that before taking action under section 148, the assistant officer should conduct the inquiry. You know the existing provisions under section 148 capital A, which inter alia contains the clauses A, B, C, D. A requires to conduct the inquiry that there is any case of escapement of income or not. Then he has to issue the notice to the SSC. Then the SSC submit his reply to the SSC. Then the order under section 148A into bracket small d, the order has been passed considering the material available with the AO and the reply given by the SSC. This is the existing provision, meaning thereby before insertion of the new provisions of section 148, 148 capital A, 149, 151 and the amendment to section 152, the assessing officer shall conduct the inquiry before taking any action under these provisions. Now, under the new provisions, there is a change. There is a very drastic change, notable change is there. And in addition to that, there are two more changes are made to the provisions of section 149, which provides for the time limit for the issuance of notice under section 148 and 148 capital A. Till date, 149 provides for the time limit for the issuance of notice under section 148 only. Now under the newly substituted provisions, now the time limit for issuance of notice under section 148 and 148A. The existing provisions of section 151, which provides for the prior approval of the specified authority under section 148 and 148 capital A, that is also amended. The specified authority has been changed, and the principal chief CIT or the CIT, principal chief CIT or chief CIT or the principal CIT or the CIT, the earlier provisions has been gone away, and now the additional CIT or additional director of income tax or the joint CIT or the joint director of income tax are defined as the specified authority under section 151. Now the Finance Bill 2024 has made certain amendments. In short, the insertion of the new provisions of section 148, 148 capital A, 149 and 151. This is effective from 1st September 2024, meaning thereby any notice issued on or after 1st September 2024 will be governed by the newly inserted provisions under the Act. I read certain important provisions of the newly inserted provisions under section 147 and the 148. If you read the newly inserted provisions of section 148 capital A, the concept of conducting any inquiry with the prior approval of the specified authority has been removed. Now there is no such provision. The assessing officer, as per the newly inserted subsection 1 to section 148 capital A, he will issue the notice, so-called notice, very importantly, accompanied by the information which suggests that the income chargeable to tax has escaped assessment for the relevant assessment year. Earlier, there is no provision that while issuing the SCN, the assessing officer has to accompany the information with that notice. Now, this is very welcome change that along with the show-cause notice, the assessing officer has to accompany the information with him, which suggests that the income chargeable to tax has escaped assessment for the relevant assessment year. This is provided under the newly inserted subsection 1 to section 148A. Friends, the existing provisions of 148 capital A that provides for the clauses A, B, C, D. Now the newly inserted provisions under section 148 capital A, which provides for the subsection 1, 2, 3. This is very important. Then another aspect is that under the newly inserted subsection 1, which empowers to issue the show-cause notice, there is no specific provision for the minimum or maximum time limit for making compliance to the notice, granting an opportunity of being heard to the assessee. If you read the old existing provision section 148 capital A, there is a time limit. There is no such time limit, no such provision under the existing provisions. But now, for the notice under section 148 capital A, the new provisions are inserted, which requires notably to accompany the information, whatever documents or information with him, it should be accompanied with the SCN. After obtaining the service of the so-called notice, the assessee concerned has to make compliance, and he can raise the objections with the evidences or the materials why his case should not be considered under section 148 capital A, or in other words, why there is no case of any escapement of income for the relevant assessment year. The assessing officer will consider the reply submitted by the assessee in response to the show-cause notice, and after receipt of the reply in response to the show-cause notice, the newly order with the prior approval of the specified authority on the basis of the material available on records and taking into account the reply of the SSC furnished under subsection 2. This is important that after receiving the submission made by the SSC, if he wants to pass the order, he has to obtain prior approval of the specified authority. That is now the joint CIT or the joint DIT or the additional CIT or the additional DIT. So earlier provision was not there to get the prior approval before passing the assessment order. Now, importantly, under the old provisions, that is the before 1/9/2024, the information received by the AO under the scheme notified under section 135 capital A in the case of SSE are not covered under section newly substituted provisions of section 148 capital A. If you read the existing provisions under section 148 in explanation 1, that is the explanation 1 clause 4, that inter alia contains the any information made available to the assessing officer under the scheme notified under section 135A. Now, there is an amendment. These provisions are inserted at subsection 1 to section 148. 148, I am referring, not referring 148 capital A, but 148. But there is one exception. One exception is there where the AO has received information under section 135 capital A. No notice under this section, that is under section 148, shall be issued without prior approval of the specified authority. This is the restriction laid down upon the AO. Because what is the 135A? Any information, suppose there is a mismatch regarding the returns file and the AIS or any information with the assessing officer, and he directly exercise the powers for the reopening. Now there is a restriction laid down in the newly inserted provisions that if there is any information under section 135 capital A, the assessing officer can issue notice, but with the prior approval of the specified authority. In the other circumstances, there is no requirement to obtain prior approval of the specified authority if the action taken under section 148. Now, as per the substituted provisions of section 148, subsection 1, provisions that not exceeding the month
نلمح فجرا في شباب قد أشادوا صحوة للدين كبرى. أتى الإسلام بشرى إننا نلمح فجرا في شباب.
Ashvin bhai? Hello. Am I audible?
You're being hacked. Please shut the meeting.
إننا نلمح فجرا في شباب صحوة للدين. أتى الإسلام
Hello. Am I audible?
Yes, sir. You can start now.
Because there is some disturbance. I am referring to newly inserted provisions of subsection 1 to section 148. The time limit of furnishing the return of income is now not exceeding the 3 months from the end of the month in which such notice is issued. The existing provisions, very interestingly, which has been amended by the Finance Act 2023 with effect from 1st April 23, which provides, I just read, require him to furnish within a period of 3 months from the end of the month in which such notice is issued, or such further period as may be allowed by the AO on the basis of an application made in this regard by the SSC. Now, in the newly substituted provisions under section 148 subsection 1, this extended period is not allowable now. The maximum period is 3 months from the end of the month in which the notice has been issued. If the return is not filed within this period of 3 months, the return filed subsequently by the SSC will not be treated as the return filed under section 139, and therefore no benefit of deduction or exemption are available to the SSC, which is very important provision. By substitution of the newly inserted provisions of section 147 to 151, particularly the concept of the deemed information as contained in explanation 2 below section 148 is now omitted or done away with. There is no requirement of the deemed information. I read the deemed information explanation to the search or the requisition, search under section 132 or requisition under section 132A, survey conducted under section 133A other than subsection 2A, that is the TDS survey. Then any information, any money, bullion, jewelry or other valuable article or thing seized or acquisition under section 132 or 132A in the case of any other person belongs to the SSC, and any books of accounts or documents or seized or acquisition pertains to or pertain to or any information contained therein relates to the SSC. All these situations were covered under the ambit of the deemed information under the existing provisions of section 148, just to empower the SSC as assessing officer to reopen the cases. When the new chapter 14B has been inserted, special provisions are inserted by the chapter 14B for the assessment of the search cases. Now this concept of deemed information is done away with, and all the cases covered under the search or acquisition will be governed by the separate chapter 14B, and therefore now in the newly inserted provisions of reassessment or reopening, there is no concept of deemed information. Importantly, the provisions, existing provisions section 149 provides for the time limit for issuance of notice under section 148 only. If you read the newly inserted section 149, which provides for the time limit for the issuance of notice under section 148 as well as under section 148 capital A. Now, if we consider the provisions of section 148, read with section 149, in normal cases, no notice under section 148 if 3 years and 3 months have elapsed from the end of the relevant assessment year. Similarly, no notice under section 148 capital A if 3 years elapsed from the end of the relevant assessment year. But if the AO has in his possession books of accounts or other documents or evidence related to any asset or expenditure or transaction or entries which shows that the income chargeable to tax which has escaped assessment amounts to or is likely to amount to rupees 50 lakhs or more, the notice under section 148 can be issued beyond the period of 3 years and 3 months, but not beyond the period of 5 years and 3 months from the end of the relevant assessment year. This is provided in the newly inserted provisions, particularly section 149, subsection 1, clause A and clause B. If we read further, as per the information with the AO, the income escaping assessment amounts to or is likely to amount to rupees 50 lakhs or more. The notice under section 148 can be issued beyond the period of 3 years, but not beyond the period of 5 years from the end of the relevant assessment year. What is the difference between the clause A and B? Clause A provides for the 140A and clause B provides for the 148 capital A. Now there is a difference, the time limit for 3 years and 3 months, 5 years and 3 months. In the cases of the notice under section 148 capital A, the period of 3 years, but not beyond the period of 5 years. There is no reference of the additional 3 months. Meaning thereby, now the reassessment proceedings can be made for the maximum period of 5 years from the end of the relevant assessment year. Recently, you know that the department has issued thousands of notice for the assessment year 2018-19. Why? Because after the 1st September 2024, 18-19 assessment year will be the out of the purview of the newly inserted provisions of section 148 and 148. And therefore, the department has issued numbers of notices for the assessment year 18-19. And if you count the 5 years limit, the first year will be the assessment in 1920. So for the assessment year 1920, the period expires as per the newly inserted provisions in the month of 31st March 2025. And therefore, the department has recently started to issue all the notices for the reopening for the assessment year 18-19. As well, you know that the CBDTA has come out with the latest circular for the guidelines for issuance of notice under section 148. That circular is dated 20 June 2024. This is the guideline for the reassessment proceedings to be carried out under the erstwhile provisions amended by the Finance Act 2023. So, if there are the cases covered under the old regime, that is the amendment made up to the Finance Act 2023, this will be governed by the guidelines issued by the board, and this is the for the assessing officers or the departmental authorities. If you look at to the this circular, there is the specimen of the notice under section 148 capital A small b. The guidelines for the enclosures or the pro forma for approval by the specified authority, specimen order under section 148 capital A small d, notice under section 148 and pro forma for the approval by the principal CIT or CIT as required under clause 3(4) of explanation 2 of section 148. These all are contained to carry out the reassessment proceedings under the old regime. Now the difference I have explained, that there is no extended period for submission of the return of income in response to the notice under section 148. Maximum period available is 3 months as provided in the new provisions, not exceeding 3 months from the end of the month in which the notice issued. Now the provisions of section 149 provides for the time limit for the notice, issuance of notice under section 148 as well as under section 148 capital A. Very importantly, the difference between the existing provisions of the reopening of the cases and the newly inserted with effect from 1st September 2024, you know that there is one amendment made by the Finance Act 2022 with effect from 1/4/2022. That is the insertion of subsection 1 capital A below section 149. That provides for the aggregation of the escapement of income. Earlier provisions for the extended up to 10 years and earlier provisions also define the term asset. And if the reassessment for the old regime is extended for the 10 years beyond the 3 years, then represent escapement of income represented in the form of asset, expenditure in respect of a transaction or in relation to an event or occasion, or any entry or entries in the books of accounts which has escaped assessment amount to or likely to amount to 50 lakhs or more. Earlier provisions defines wide explanation what is the meaning of asset. Now in the newly inserted provision, there is no explanation. There is no definition of the asset. The insertion of clause subsection 1A by the Finance Act 22 that requires the aggregation to meet with the limit of 50 lakhs or above. Earlier, when the new regime of reassessment proceedings inserted by the Finance Act 2021, the limit of 50 lakhs or more is applicable for the relevant assessment year. So if for the particular assessment year, the quantum of amount of escapement of income is less than rupees 50 lakhs, there is no jurisdiction with the AO to reopen the case. When the subsection 1A inserted by the Finance Act 2022, there is the provision in the Act for the aggregation of the asset, investment in such asset or expenditure in relation to such event or occasion has been made or incurring more than one previous year relevant to the assessment year. So 1A is not now in the statute under the newly inserted provisions. So in my opinion, the limit of 50 lakhs or 50 lakhs is applicable for the particular assessment year. So if the quantum of the alleged escapement of income is less than 50 lakhs, there is no jurisdiction even within the 5 years. So there is no provision of the aggregation to my understanding, and therefore this is very important. Another part is that under section 148, now for the purpose of the 148 and 148A, the cases covered under section 133 capital A, other than under subsection 2A, that is other than TDS survey, are covered for the reopening of the cases. So we have to understand that the survey cases are governed by the newly inserted provisions of reopening of the assessment, not covered by the search assessment. So earlier provisions, if you read 148 explanation 2, deemed information, they are with the search and the requisition and the search. So when the removal of the deemed information, now they are separately covered at the clause 6 below subsection 3 of section 148. So meaning thereby, any information in the case of the SSE emanating from the survey conducted under section 133 capital A, other than under subsection 2A of the state section, on or after the first day of September 2024. So I have explained the procedure for the issuance of the notice under section 148, substitution of the newly inserted provisions of section 149, which provides not only for the time limit for issuance of notice under section 148, but also provides for the time limit for issuance of the notice under section 149 capital A, the substitution of the new section for 158, that is the specified authority. Now the specified authority for the purposes of 148 and 148A shall be the additional CIT or the additional DIT or the joint CIT or the joint DIT. The amendment made to section 152, if you read carefully 152 subsection 4, that where a notice under section 148 has been issued or an order under clause D of section 148 capital A has been passed prior to the first day of September 2024, an assessment, reassessment or recomputation in such case shall be governed as per the provisions of sections 147 to 151 as they stood immediately before the commencement of the Finance Act 2024. So I discussed with you that the department already started to serve the notice for the assessment in 2018-19 because of this subsection 4 amended by this Finance Act. So with this, the important aspect of the reassessment or reopening of the cases, which is distinguished from the earlier provisions I have discussed with you. Now I take up the new provisions, that is the introduction of the block assessment provisions in case of search under section 132 and requisition under section 132 capital A with effect from 1st September 2024. Friends, if we look at the past history of the income tax law, chapter 14B had been inserted by the Finance Act 1995 for the first time, and that has been made effective from 1st July 1995. That provisions was in force up to 31st May 2003. From 1st June 2003, new provisions under section 153 capital A, 153B, 153C inserted, which remains in force up to 31st March 2021. Again, all these provisions relating to the procedure for the assessment of the search cases, now they have been shifted to the provisions of section 147 to 151 if the search initiated on or after 1st April 2021. As I discussed that under the concept of deemed information, explanation 2 below section 148, all the search cases were covered. Now again, by this finance bill and the amended Income Tax Act, the old concept of block assessment has been came into force, has been implemented in the Income Tax Act, and that is now from 1st September 2024. Means where on or after the first day of September 2024, any search under section 132 or books of accounts or other documents or any assets requisition under section 132A in the case of any person, that will be governed by the newly inserted chapter 14B, special provisions for assessment of such cases, which contain the provisions of section 158 capital B, 158BA, that provides for the assessment of the total income as a result of search, and the subsequent provision subsection R runs up to the subsection 7, then the section 158BB that provides for the computation of total income of the block period, and this is the newly inserted provisions of the block assessment. Now we have to see what is the meaning of block period. If you read the provisions of section 158 capital B, clause A defines the block period. Now, by and large, the newly inserted provisions of the block assessment under chapter 14B are similar to that of the old provisions as inserted by Finance Act 1995. But there are minor differences there, and that differences are very effective to my opinion. If we read the definition of block period means the period comprising previous years relevant to the 6 assessment years preceding the previous year in which the search was initiated under section 132 or any requisition was made under section 132A. And also this is the plus period of fraction of the period, and also includes the period start from the first day of April of the previous year in which search was initiated or requisition was made, and ending on the date of the execution of the last of the authorizations for such search or such requisition. This is the definition of block period. Now, as per the provisions of section 158BA, now the SSC concerned has to file one return of income for this whole block period, and the assessing officer has to pass the order, consolidated order for the block period. This is the newly inserted provisions. Now, what is the difference and what is the gravity of the difference that in the old provisions under the block assessment, chapter 14b, I again read that the fraction period also include the period starting from the first day of April. 6 years we have to compute, consider for the block period, plus the period that is the previous year in which search initiated, that starts from the 1st April and ending on the date of the execution of the last authorization. Now explanation for below this clause, that what is the meaning of the last authorization. For the purposes of this chapter, the last of the authorization shall be deemed to have been executed in the case of the search on the conclusion of the search as recorded in the last Panchnama drawn in relation to any person in whose case the warrant of authorization has been issued, and in the case of the requisition under section 132A on the actual receipt of the books of accounts or other documents or assets by the authorized officer. The earlier old provisions that provides for the previous year in which search was initiated or requisition made and ending from the date of the commencement of the search. Now this is the difference, and ending on the date of the execution of the last authorization of the search or such requisition. There are chances that the beyond the 6 years block period, there may be 2 financial years. Suppose the search action taken by the department in the month of March 25. The initiation of the search in the month of March 25, and the last Panchnama, suppose the last Panchnama drawn in the month of the May 25. So in my opinion, 2 financial years will be covered within the definition of the block period, not 1, because it starts from the 1st April of the previous year in which the search was initiated and the ending on the date of execution of the last authorization. The explanation defines the meaning of the last authorization. So this is somewhat enlarging the scope of the block assessment or a block period, and that will create the difficulties to the person search. This is important aspect of the newly block period assessment. I am shortage of time. I run fast. That now newly under the new provisions, the abatement of the regular assessment, no further assessment, no reassessment till the block assessment concluded. Now the concept of the one consolidated assessment for the block period has been now reintroduced. What is the meaning of total income and what is the meaning of undisclosed income? This is also somewhat different as that was provided in the old block assessment scheme, because if you read section 158BB subsection 1, that has been defined the total income referred to in subsection 1 of subsection 158BA of the block period shall be the aggregate of the following. Now this is very interesting. What is the aggregation? There are 4 parts. Total income disclosed in the return furnished under section 158BC, that is the return filed by the person searched in response to the notice issued by the AO for the block period. Whatever total income is disclosed. Now, total income assessed under subsection 3 of section 143 or section 144, 147, 153A, 153C prior to the date of initiation of search or the date of requisition as the case may be. 158BC return total income plus this one we have to add. Then again total income declared in the return income file under section 139 or response to a notice under subsection 1 of section 142 or 148 and not covered under clause 1 or 2. If no regular assessment made, your return income we have to consider, meaning that no assessment under section 143C or 144, 147, 1A or C. That we have to add. Then 4, total income determined where the previous year has not ended on the basis of the entries relating to such income or transactions recorded in the books of accounts and other documents maintained in the normal course on or before the date of the last authorization for the search or requisition related to the search period. undisclosed income determined by the assessing officer under subsection 2. This is important. Now, these all 5 parts as covered under section 158 BBA, which defines the total income, and under the newly inserted this block assessment scheme, the tax at the rate of 60% levied on the total income. In the old scheme block assessment, that is the tax at the rate of 60% on the undisclosed income. Now on the total income. Of course, subsequently, the whatever income under clause 2, 3, 4, they have to be deducted. But the assessing officer, while passing the assessment order, consolidated assessment order, he will determine the total income as per the provisions of section 158 BB. That, in my opinion, that will create some issues for the person searched and may enhance the tax liability. Of course, in the newly inserted provisions, there is the tax 60% on the total income. There is no surcharge, no interest under section 234A, 234B, 234C. There is no penalty under section 270A, even no penalty on the undisclosed income if the assessee offers undisclosed income in the return income filed in response to search and paid tax along with the return. If not paid, or if there is undisclosed income more than disclosed by the assessee in the return filed in response to notice under section 158BA, then the penalty at the rate of 50% of the tax payable will be levied. In short, if we look at the provisions of the block assessment under the new chapter 14B, the person covered under the search is liable for the 60%. No additional burden of the surcharge or the interest or penalty under section 270A. There is great immunity for the person searched. So there are chances that the big shots may invite कि आप आ जाओ और सर्च कर लो 60% ले लो क्योंकि कोई इंटरेस्ट नहीं है कोई पेनल्टी नहीं है वो return before filing the return along with the return he will disclose all the income and there is no differential undisclosed income. But one more important part that is very risky, that is the differ from the old block assessment regime. That is, assessing officer can assess on the basis of the evidences found or other documents and such other material information as are either available with the AO. Now the additional link or come to his notice by any means during the course of proceedings under this chapter. This magnifies the powers of the AO. There is the enlarged scope of the definition of the undisclosed income. So this is the very risky provision. If during the course of the search assessment proceedings, the assessing officer having any information by any means, he can treat the same as the undisclosed income. So in the old provision, there is no such powers with the AO. Now the other provisions of the person searched other than the in the case of the person other than the person searched governed by the 158 BD, the time limit is also there, 12 months from the end of the month in which the last of the authorization, the approval of the additional CID or additional CID, joint CID or joint DID. The under this chapter, the transactions of the covered under section 92C are excluded, and also the exclusion of the powers under section 144C. I have repeated instructions from the convener that I have to conclude. There is the Vivase Vishwas scheme also. So it is very well known. Regarding the partnership firm working partners, I would like to discuss, but the paucity of time, I hereby conclude. I think I have covered to my level with all the important aspects of the newly inserted provisions or the amendment made in the Income Tax Act by this Finance Act. I once again very much thankful to the organizers, all the organizers from the West Zone and from the state of Maharashtra and from the state of Gujarat to give me an opportunity to share my views. And I hope that you will be happy to know my views on the amended provisions. Thank you very much. Thank you, Ashvin bhai. Thank you very much, Jain sir, and all the office bearers of the AIFTP.
Thank you, Mitesh bhai, for your elaborate and lucid exposition to the newly amended provision. And we are really very much thankful to you. If required, we may have again, one lecture, because I think partnership that withdrawal TDS and all, I think I don't know whether it was covered or not. That for that we may have some other occasion to deal with that. Now, may I request before I request Shri Bharat Bhai said to dwell on the GST provisions under the budget. May I request the Honorary Secretary of Dhaval Patwa to introduce Shri Bharat Bhai said.
Am I audible, sir?
Yes, yes.
Okay, thank you. First of all, I am very much grateful to the organizers of this webinar for giving me this opportunity to give introduction of today's learned speaker, Shri Bharat Bhai Lakshmikant Seth. Friends, Shri Bharat Bhai Lakshmikant Seth, born on 25th November 1957, is BCom LLB advocate, practicing in the field of sales tax, VAT, GST and income tax as tax advocate since 1980 at Bhavnagar. He was president of All Gujarat Federation of Tax Consultants in 2020 to 2021. He was president emeritus of the Bhavnagar Income Tax Bar Association for 2 terms in 2019 to 2023, and of the Bhavnagar Sales Tax Bar Association for 2 terms in 2019 to 2023. He had served as Honorary Secretary of Saurashtra Chamber of Commerce and Industry, Bhavnagar, for 2 terms from 2014 to 2018. He represents Bhavnagar Sales Tax Bar Association in the VAT grievance cell of Bhavnagar range since 2005. That means, friends, in this era of 2020 cricket match, where whole match is finishing in 2 or 2.5 hours, he is going to complete 20 years in 2025 by representing Bhavnagar Sales Tax Bar Association in the VAT grievance cell of Bhavnagar range. He was president of Bhavnagar Income Tax Bar Association for 2 terms, and he is the youngest president of Bhavnagar Sales Tax Bar Association at the age of 36 during the term 1993-94 to 1995-96. He was chairman of Taxation Committee of Saurashtra Chamber of Commerce and Industry, Bhavnagar. He was also vice president of All Gujarat Federation of Tax Consultants, Ahmedabad, for 2003, 2004 and 2008 to 2009. He was also vice president of the Gujarat Sales Tax Bar Association, Ahmedabad, from 2002 to 2003 and 2007 to 2008. He is member of National Executive Committee of All India Federation of Tax Practitioners, Mumbai. Along with this, he is author of 10 books of Gujarat VAT Act in English and Gujarati and 3 books on GST. He is compiler of VAT division of Gujarati Monthly Tax Magazine, Tax Reporter, from 2008 to 2022. He was speaker in the 12th RRC held by the Gujarat Sales Tax Bar Association at Jammu and Kashmir, in the 5th RRC held by the Bhavnagar Sales Tax Bar Association at Kolkata, Gangasagar, Jagannathpuri and Champaran, and in the 6th RRC held by the Bhavnagar Sales Tax Bar Association at Sikkim and Darjeeling. Not only he has delivered speeches on VAT and GST, but also on art of living in various seminars and conferences. He has written various articles in journals of on tax matters. But it's not only this, he is also serving to the society by engaging himself in the social activities. He is founder vice president of Bhavnagar Samast Mod Vanik Samaj Charitable Trust. He was president of Bhavnagar Samast Mod Vanik Samaj Charitable Trust. He was trustee of Shri Krishna's Nagar Vaishnav Samaj Trust, that is Govardhanaji Haveli, between 2004 to 2016. He was editor of Mod Mahoday magazine and international mouthpiece of Mod Vanik Samaj. Friends, in the beginning, Vishwesbhai has rightly said that Bharatbhai is Bhisma Pitama of GST, and in fact, he is my guru. And since I have started my practice in 1998, when the prevailing law was the Gujarat Sales Tax Act, then comes Gujarat VAT Act, and now in GST, I am regularly referring his books and articles. And therefore, I am very much delighted to present before you such type of personality who is going to deliver his speech on the subject analysis of budgetary provision of GST amendment in Union Budget 2024. Friends, please welcome with big round of applause. Thank you. Over to you, sir.
Thank you, Dhaval Bhai. Now may I request Bharat Bhai to please deliver a lecture on GST, budgetary provision. Thanks.
Thank you, Ashvin Bhai.
Thank you.
And thank you, Dhaval Bhai, for giving my introduction very nicely. Good morning to all. National President Shri Narayan Jain ji, Deputy President of AIFTP and my dear friend Samir Bhai Chani, all office bearer of AIFTP, convener of this webinar Shri Ashvin Bhai Acharya, Chairman of AIFTP-WZ Shashank Mithaiwala, President and all office bearers of all joining association in this webinar, and specially thanks to my dear friends here Mitesh Modi, Ashvin Bhai Acharya and Shashank Mithaiwala for giving me an opportunity to share my view on GST amendment. And I congratulate to all joining association and AIFTP-WZ for organizing such a webinar that is deep dive into union budget. Friends, as we all know that now GST is a central subject, and in a union budget there is 37 amendment in CGST, 4 amendment in IGST, 2 amendment in Union Territory GST Act, and 1 amendment in SHESH. So we will not discuss all this amendment. We will restrict our discussion on 3 new added sections, that is section 11A, section 74A, and section 128A. So first of all, we will discuss section 128A. Friends, it's an amnesty scheme. And when we read heading, it says that waiver of interest and or penalty or both relating to demands raised under section 73 for certain tax period. Friends, we all know that section 73 and section 74 deal with the matter in which tax has been not paid or short paid, ITC has been availed or utilized wrongly, or anonymous refund has been given. The difference between 73 and 74 is that the 73 is without any reason of fraud or willful misstatement, while in 74 it is a willful misstatement of fraud. So we shortly say that 73 is for non-fraud cases and 74 is a fraud cases. So this section heading is said that this section will apply to the order of section 73 only and not for section 74. Well, the section start with notwithstanding anything to the contrary contained in this act. So this section will override all the section of GST, and this section will applies in this such cases. Now when we go to section 1, there is a 3 instances given in which this section will apply. The one is notice or statement issued under section 73(1) or 73(3). We all know that there is a procedure of giving so-cause notice. Before that, they can issue advisory notice to the dealer and then so-cause notice. So if so-cause notice or statement has been given, then this section will be applied. The second, that is B, is order passed under section 73(9). 73(9) is an order in DRC 07. So if order has been issued, then also this section will apply. And the C is order passed under section 107 subsection 11 and under section 113 subsection 1. Section 107 is an appeal and section 113 is a revision. So if order under section 107, that is appeal order, has been done, or in a divisional order has been done, this section will be applied. So friends, if you have not received any notice or statement or order, or there is no appeal order or divisional order in this section 73, then this section is not for you. If any Shimoto payment has been done under this 73 or 74, this section will not apply. Now question is arise that now if it is possible to have any notice or statement and order. So firstly, this section applies to only 3 years. That is 2017, 18, 18, 19 and 19. So in this 3 years, when we go to the time limit prescribed in the section 73, the time limit is for order 3 years from the due date of filing annual return. The date of annual return, filing of annual return any financial year is at the end of financial year succeeding 31st December. So for 2017-18, the annual return time limit has been extended. So time limit for issuance of notice under section 2017-18 is 31st December 2023. An order can be passed within 3 months of the date of the order, time limit is prescribed for the notice. So the order can be passed before 31st March 2024. For 2018-19, 31st January 2024 is the date for issuing notice, and 30th April 2024 is a date for order. And 2019-20, the day limit of issue notice is 31st May 2024 and order is 31st August 2024. So for the issuance of order and notice for all these 3 years, it is now time bound. No new notice or statement or order can be passed for these 3 years under section 73. Yes, under section 74 it can be passed, but 74 is not part of this section 128A. So if you want to pay any tax, you know that this tax has been shortly paid or not paid, or any ITC has been availed wrongly or utilized wrongly, then if you pay that, then you have to pay.
قد سار يشدوها حثيثا منشدا لبى وأبنى الإسلام بشرى
أجناد تقدم
فوق أعناق العدا واستأصالت عدا حامت صنوف
You're being hacked. Please shut the meeting now.
الإسلام بشرى إن
مؤسسة أجناد تقدم
there are certain hackers, they are playing mischief, so we will debar them, but still, they are the hackers. Extremely sorry. Please continue. And extremely sorry for the inconvenience to all the members. अभी डिबार करो ने कर दिया ना ध्यान रखो कोई भी ऐसा इमीडिएटली करो हाँ हाँ फिर से करो हाँ हाँ
Sir, unmute yourself.
Now I'm audible.
yes sir
Okay.
उसको divide him. He was the hacker.
Yes. Well, so if you have not received any notice or statement or order in the section 739 or appeal order or revisional order.
الإسلام بشرى إننا في شباب قد كانوا صحوة للدين كبرى.
Ashvin, somebody is trying to hacking the link. Something wrong is going on. Ravi should remove. Bharat bhai, continue.
Okay. So friends, what I said is that if you have not received any
الله توفيقا وتسديدا وأجرا.
مؤسسة أجناد تقدم
دار
Please Bharat.
What I said is that if you have not received any notice or statement under section 73 or an order under section 73 or an appeal order or revisional order for the year 2017-18 to 2019-20, you can't get benefit of section 128 capital. Second thing, this section says that you have to pay full amount as per notice, statement or order. So if in a notice you have 3 or 4 issues and you say that I will pay tax for 1 issue and I will continue to file appeal or my right to get appeal for 2-3 issues, it is not permissible in this section 128.
Yeah, Bharat, sorry, please.
Yes. So if you not paying full amount as per notice or as per statement or as per order, you are not getting benefit of waiver of interest or penalty of both the section. Okay. So if you insist that no, I will pay for 1 issue only and other 2 issue or 3 issue I will go to appeal, this section will not apply. In short, you have to pay full amount as per notice or intimation or order. Now the payment of tax, fully payment of tax has to be done before date notified by. In the 53rd, yes, I'm on it. Hello.
વોલ્યુમ વધારજો ભરતભાઈ તમારો અવાજ
નથી આવતો
ઓછો આવે
Okay. Now. Hello.
Okay.
Okay. So 53rd GST Council meeting has said that tax should be paid before 31st March 2025. But the section says that it should be paid before notified date. Now date will be notified and you have to pay the whole tax, entire tax amount, full amount before that you get. Then only you will get the benefit of this section. Now, as we all know, that this section will not come immediately after passing this finance. As per the procedure of GST, this bill will be passed by all state government in their assembly. After that, the date of implementation will be issued by the government for implementation of Section 128 capital. So, in my view, it will take 3 months of this implementation. It may be coming from 1st October 2024 or after that. So, in such cases, if you have not filed any appeal, it is advisable to file appeal against order, because if you have not filed appeal, then this government can share that you have admitted the amount and now your no matter is pending before department, you will not get benefit. So it is advisable to file appeal when you have received an order under Section 73. And if appeal has been filed, you will get the benefit. Now, if order has been passed under Section 74, you have gone into appeal and you have pleaded that this is not a case of Section 74, and it is a case, matter of Section 73. And if the appeal order has given a relief that this case will be treated as 73, you will get benefit of this Section 128. So in such cases where you have filed already appeal, contact your appeal commissioner and represent that this case is not Section 73, because we all know that in the case of bogus billing or fake invoices, department has issued Section 74 notice, which is not valid because they have not established that there is a fraud or there is a willful misstatement or suppression. They have simply issued notice under Section 74 because we have purchased goods from some bogus dealer, or registration of that dealer has been cancelled or after you have purchased the date. So in such cases, you can approach the appeal commissioner, convince him that this case is not of Section 74, which is pertaining to Section 73 only. And if the order has been passed that this can be a Section 73 order, then you will definitely get the benefit of Section 128A. Now, if appeal order has been passed and some additional amount has been raised in appeal order, then you have to pay that additional amount also within 3 months from the date of such order. Then only you can get the benefit of this Section 128 capital. And the third provision, which always government put in every amnesty scheme, that if interest and penalty has already paid, no refund will be given. So the government always encourage defaulter and the honest people, law-abiding people who pay the tax, interest, penalty, as and when they get notice or a statement, advisory or order, they will not get benefit of this Section 128A. We should rather represent, I will request AIFTP as well as all other associations that this thing should be rectified, refund should be given, and if they don't want to give refund in cash, such amount should be credited in the cash ledger of the dealer so that they can utilize it in their output tax liability. So this is one point that we have to represent before this bill has been passed. Subsection 2 is clearly says that this section 128 capital A will not applicable anonymous refund. So this section will be applicable where tax has been not paid, tax has been short paid, ITC has been availed wrongly, or ITSC has been utilized. So in 4 cases only this section will be applied. Subsection 3 says that if you have filed an appeal, then you have to withdraw the appeal. And if you're not going to withdraw the appeal, this section benefit of waiver will not allow you. And subsection 4 says that if you have taken any benefit of section 128 capital A, you cannot file appeal against this. So you have not right to appeal against this order passed under section 128A. Well, what I have said already, that when this section will be came into operation. Friends, we all know that our is a federal structure, and there is a 30 state has to pass this bill, and then only this section will be applicable. What the fate of this section is very much in the doubt, because some of state government, there is an election going to be within 6 months, but they have to pass ordinance for this act, and then only they have to implement, government will implement this section. Now the question will arise whether this section will apply to demand of IGST and cess, because the amendment will be done in CGST Act only. No IGST Act has been amended, no cess has been amended, no UTGST, and unilateral GST has been amended. So friends, when we go to the act, this section 120A has been added in the chapter offense and penalties. There is already one section in the Act 128 is a power to waive penalty or fees or both. Now this is power to waiver of to interest and penalty both. Now whether it will be applicable to IGST, UT, GST or CST, cess. In IGST, there is a section 20. Application of provision of Central Goods and Service Tax Act. That is the heading of section 20. And it provides that subject to the provision of this act and rules made thereunder, the provision of Central Goods and Service Tax Act relating to clause 1 to clause 25 shall mutandis apply so far as in relation to the integrated tax as they apply in relation to central tax as if they are enacted under this act. And in clause 1 to 15, the clause 21, 21 is offense and penalty. So the provision of offense and penalty, all section 128 to 134 will apply to IGST Act also. The same thing has been in UTGST Act also. In section 21, UTGST in clause 22, offense and penalty have been already mentioned. And in GST Compensation to State Act in section 11, other provision relating to sales, it provides that the provision of Central Goods and Service Tax Act and the rules made thereunder, including this this section is including those relating to there is an assessment of offence and penalties, etc. So in offence and penalties cases, in cess also you can get benefit of waiver of penalty and interest. So friends, we know that central government implement 4 acts. One is the Central Goods and Service Tax Act 2017. The second is Integrated Goods and Service Tax Act 2017. The third is Union Territory Goods and Service Tax Act 2017. And the fourth is GST Compensation to Cess Act 2007. So the slogan given at the time of implementation of GST, that one nation, one tax, one market. But there is a 4th central act and 30 state acts. We have 34 GST act. Regarding rates also, there is no single rate, no one tax, from 0.25 to 14%, and that too different provisions for goods and different provisions for services. So friends, this 128 capital A section is applicable to section 73 only. Please mind very well that it will not applicable to order under section 74. If order or notice under or statement under section 74 has been given, then you have to pay interest and penalty both. So I think this thing is very much clear that we will get benefit of waiver of interest and penalty under section 128. Now we will discuss the second new section inserted under section section 74A. Friend, 74A, why it has been included is a very big question in so many tax consultants' mind. There is section 73 and section 74 already in the Act. This section 74A is a merger of both these sections. The provisions are at verbatim taken from section 74. The only difference between these two sections and this 74A will be applicable from 2024-25. That in current year, if any, after the end of the year, if any notice or a statement is to be issued, it will be issued under section 74. 73 and 74 as still in operation for the year 2023-24. So the academic discussion is okay for section 74, but when it will be issued notice after that, after the year end, we have to read or understand this section 74 after that only. The difference between the section 73, 74 and 74A is that as we all know, in 73, the notice is to be issued at least 3 months prior to the time limit specified in subsection 10 of issuance of order. So the order date is the time limit for issuance of order is within 3 years from the due date of furnishing of annual bill. So 3 months for order and 33 months is for notice. Now they have included in 74A that now we will get 42 months to issue the notice from the due date of filing annual bill. So in section 73 case, they have added 12 months more to get to issue notice under section 73. While in section 74, the time limit for issuance of notice is at least 6 months prior to the time limit specified in subsection 10. And the time limit for issuance of order is within 5 years from the due date of furniture. So in case of section 74, well, there is a fraud or willful misstatement or suppression, the time limit was 60 months to pass an order and 54 months to issue an notice. Now, the period has been reduced by 12 months. Now 42 months, not 54 months, will be given in the case of fraud. So, well, what I have earlier said, that government is giving very much importance to the defaulter. Those who have done fraud, they will be issued notice within 42 months, and at the time of 42 months has been passed, no notice can be issued. So the first difference is now the period from 24-25. Period of issuance notice is 42 months from the due date of filing annual return. The date of filing annual return is 31st December, succeeding the end of the financial. So, first difference is that. Second difference is order under section 73 is to be passed within 3 months. And order under section 74 is to be passed within 6 months. The period we all know that is very short for department to pass because they issue notice in the last month of time limit. We all have received so many notice in the month of September and then December. So when we give reply within 30 days, they will get only 2 months to pass an order. So in this, they have now revised the date to pass an order, and that to 12 months from the date of the notice. So if a notice has been given within a 12 months, then you will get order within a 2 years, that's 24 months. And if order cannot be passed in the section, in the section 24A within 12 months, the JCIT or the rank before above JCIT can extend the date for maximum 6 months. But he should record reasons for delay in issuance of order in writing. So the now order can be passed within 18 months. If 18 months time period has been done, the order is time bound. If 42 months has been passed, notice is time. This is the difference between 73, 74 and 74E. 74 is applicable from the period 2024 to 2005. In 74A, one welcome step has been taken by the Parliament. That if the demand is less than 1,000, no notice will be issued. We all know that when demand is only 1,000 rupees or 100 rupees, the penalty under section 73(9) or 74 is 10% of tax or 10,000, whichever is high. So if your only demand is 1,000 rupees, you have to pay penalty of 10% is 100 or 10,000, which is higher. So you have to pay 10,000 as a penalty and 100 as a 1,000 with tax. So they have taken wise decision that if the tax is less than 1,000, notice will be not issued. So if tax is more than 1,000, we will get the notice. Friends, we have GFPs have already represented regarding this 73(9) attack on the provision that penalty should be reduced to 10,000 to 1,000 or 10%. And in big cases where taxes are 25 lakhs or 30 lakhs, the penalty will be 3 lakhs, 2.5 lakhs. So it should be reduced because 73 is for genuine mistake. There is no fraud, there is no willful misstatement, there is no suppression. It is a genuine mistake, and in genuine mistake, penalty should be a little bit moderately. So we have already discussed, represented before GST Council. Such section is 7311. 7311 says that if where any amount of self-assessed tax, matlab, if you have filed GSTR 1 and your output liability has been created like something like 5 lakhs, then it is a self-assessed tax. So well, where any amount of self-assessed tax, output liability, tax liability as per GSTR 1 is 3 lakh, and you have filed GSTR 3B showing 2 lakh, then 3 lakh is outstanding because self-assessment tax is as per GSTR 1. So if self-assessment tax payment is payable or not paid, or any amount collected as tax, TCS or TDS, has not been paid within period of 30 days from the due date of payment of such tax. So if suppose I have filed GSTR 1 and output liability is 5 lakhs, I have to file GSTR 3B of this month before 20th day of this month. Because of financial hardship, I cannot pay the tax, and if you cannot pay the tax, you cannot file GSTR 3. So I have paid the tax after 30th. I have paid late fee for GSTR 3B. I have paid interest on that 1 month. Then also, you have to pay penalty under section 7311, and which is 10% of the tax or 10,000, whichever is. So in big company cases, if the demand as per the 3B is 3 lakhs or 30 lakhs, and he has paid it after 30th day with interest, with a late fee, then also 10% of the tax, that is 30,000 or 3 lakhs, has to be paid. And this is a very draconian provision. We have also represented this matter before GST Council. Second welcome step taken before is that when you get notice, and if you pay the tax within 30 days of notice under section 73, then no penalty will be paid. So that days of 30 has been now extended to 60 days. So if you have paid tax with interest within 60 days of date of notice, you have not to pay penalty. Friends, as you all know, that penalty under section 73 is 10%. But in 74, the penalty is 100%. And if you pay notice, if you pay tax and interest under section 74, shoe moto on your own assignment or as per advisory, then you have to pay penalty at the rate of 15%. And if after notice you pay the tax and interest within 60 days as per section 74, and as per section 74 within 30 days, the penalty will be 25%. And if you pay the tax as per order, tax and interest, then in order there will be 100% penalty. But if you pay 50% penalty, the proceeding will be deemed to be complete. So mind well that section 73 and 74, whatever provision of penalty and interest has been already in 74A, they have specifically written in fraud case, this penalty will be levied, in non-fraud case, this type of penalty will be levied. Ashvin bhai, may I continue?
Just a minute.
Okay, okay. Now, friends, the new section added, the third section, section 11A. Section 11A, the heading says power not to recover goods and service tax not levied or short levied as a result of general practice. What is general practice is a question of dispute. In excise, such type of provision has been already there. We see some instances that in peanut butters, the rate of tax is 12%. But if you add chocolate in that, then the tax of rate will be 18%. So if whole industry or whole trade is paying 12% tax on all peanut butters, and if they represent to the GST Council, and if GST Council will recommend, then government will not levy the tax which is short paid or short levied by the whole industry. So this section will be applicable where GST Council will recommend, and it relates to general practice of the trade and industries. Such cases are so many in pharmaceutical also and in other industries also, where in general practice, and that because of in excise there is a HSN or classification. In VAT, those who are doing only VAT regime and they are not liable to excise, they have made such mistake because of classification or HSN code. So this section has been beneficial to the whole industry, and whole trade and industry can take benefit of this section. Now this section 11A has been added in IGST Act as a section 6A, Union Territory GST Act as a section 8A, and says under section 8. Now the question will arise that why this 3 Act has to be amended when section 128A and 74A has not been amended in this section. So this section has been added in the chapter levy and collection. And levy and collection is not a part of the section 20 of GST Act, section 21 of GST Act, or section 8 of compensation to sales. So this section has been added in all these 3 sections. Well, friends, some important point we will take, as I have only 5 minutes more. Out of 37 amendment in CGST, 15 amendments are done to incorporate new section 74A in this type of act. But in the beginning of my lecture in GST, when GST is implemented, I said that 73 and 74, the 2 sections we have to learn by heart, because in each and every demand, the proceeding under section 73 and 74. Yeah. Let us look which section says that the penalty or interest or demand can be created under section 73 and 74. Now amendment 74A. The first section is section 10, composition. So in composition, if you have violate any condition, and tax has to be paid as per higher rate, because in composition you are paying 1% tax on turnover. Then the tax, penalty and interest as 70 proceeding under section 73 and 74 and now under section 74A will be initiated. The second section is section 21, which is input service distributors, ITC, taken by input service distributors. And then in this case is also, if demand is to be created, the proceeding under section 73, 74, and now 74 is to be initiated. The third section is section 35, which is related to accounts and other records. In this also, if you have violated any rules or sections regarding accounts and records, then also proceeding under section 73, 74, or 74 will be initiated. One more amendment is done in section 39. In 39, the return to be filed by the person who's collecting tax at source. Earlier, the provision was that such deduction in the months in which such deduction has been made. So if TCS has not been done, then he has not to file GST as such. But now it has been amended that the registered person shall furnish a return for every calendar month, whether or not any deduction have been made within the same. So from implementation of this act, all TCS registered person has to file nil return if he has not collected tax in that month. Regarding 73 and 74, 74A, in section 49, which is related to payment of tax, interest, penalty, and other amounts, and if any demand has to be created, the proceeding should be initiated in section 73, 74, and 74A. In section 50, which is interest on delayed payment of tax, the same proceeding is to be done in the section 73, 74, and 74. In section 51, tax deduction at source, if any violation is done by the registered person, proceeding will be initiated in section 73, 74, and 74A. Then in section 61, which is scrutiny of refunds, returns. In that case also, the proceedings will be done under section 73 and 74 only. Now 74A. And then section 62, assessment of non-filers of return. In such cases also, notice will be given, will be able to reply, order has been done, but proceedings will be done in the section 73, 74. In section 64, summary assessment in certain special cases also, proceedings is to be done in the section 73, 74. The important section 65, that is audit by tax authority. Friends, in VAT regime, order or audit has been done, the demand will be created by the authority. In GST, audit has been done by audit authority, and he will give advice or information to the registered person that you have to pay this much tax or this much interest or this much penalty. But they have to start proceeding up to section 73, 73, and 74 to collect the tax and to pass an order. The same thing under section 66, special audit, proceedings should be done under section 73, 74. Then in section 135, general provision relating to determination of tax, the proceeding under section 74. They have added under section 74A. Then in section 104, which relate to advance ruling to be void in certain circumstances, the demand can be raised by initiation of proceeding under section 74 or 74A. One welcome step as a will take to this bill. Earlier in tribunal, sorry, in appeal, the maximum amount to be paid is 25 crore. 10% of the tax or 25 crore, whichever is less. Now this 25 crore has been reduced to 20 crore. So you have to pay 20 plus 20, 40 crore, SGST and CGST. In this section also, 73, 74 and 74 has been added. One more yes, one more welcome amendment is 109, section 109. Anti-profiteering measure. When rate of tax has been reduced and that reduced portion has not been passed on to the consumer or the buyer, then buyer can make request to anti-profiteering authority. Anti-profiteering authority will pass the order. Against that order, there will be no mechanism to file appeal. Now they have said that the appeal can be filed in GST tribunal in principal bench. And the second change they have done is that now they have made sunset provision of anti-profiteering. After 31st March 2025, they will not accept any request for anti-profiteering. So after 5 years, this section will be removed from this act. Second thing, appeal has been not allowed when you have to file appeal against tribunal. Tribunal is still not working. At that time, they have said that after GST tribunal will working, within 3 months you have to file appeal. So there will be no delay if you have filed within 3 months. But after taking charge as the president of principal bench, the more than 1 year has been passed and still today, tribunal is not working in any state or even principal bench is also not in the working position. So they make amendment in section 112, appeals to have a tribunal, that the date will be notified by the government, and after that, within 3 months, you have to file appeal to tribunal. Regarding 73, 74, the last and 15th amendment was done in power to impose penalty in certain case. In all in section 127, also 73 and 74 has been amended, and section 74 has been added. They have made certain amendment in Schedule 3. Schedule 3 of the Act is activities or transaction which shall be treated neither as a supply of goods nor as a supply of service. This is related to insurance company only. Activity of apportionment of co-insurance premium by the lead insurer to co-insurer for the insurance service will not be treated as a supply of service, but provided the lead insurer pay the central tax, state tax, union territory tax, and integrated tax on the entire amount of premium paid by the insurer. So this is welcome amendment. So many clarifications, so many disputes have been created by this. The second thing added is the service by insurer to the reinsurer for which ceding commission or the reinsurance commission is deducted from the reinsurance fee. This will be not also treated as a supply of service, subject to that the central tax, state tax, or union territory tax and the integrated tax is paid by the reinsurer on the gross reinsurance premium. So this is the major changes done by the government. I hope that I have discussed all the important provisions of the budget. I am very much thankful to all organizers, especially Mitesh Bhai, Shashank Bhai, and Ashvin Bhai, for giving me an opportunity to discuss this important provision of GST. Thank you all for listening.
Thank you, Bharat Bhai, and thank you both the speaker. In fact, Mitesh Bhai and Bharat Bhai for your very lucid exposition. And I'm really also at the outset sorry for the hackers that we will to discuss some technical experts. Then immediately I phoned Ravi and told him to create a waiting room. And in 5-6 hackers were there in a waiting room. And I told him not to allow. And they take your name from the data only. And name appears to be familiar. But I said, even now familiar name appears, don't enter. Because now at this peg end, they are trying. So that means he is a hacker only. So this problem that we'll try to solve with some consultant with the expert. With this, I request the Honorary Secretary of AIFTP-WZ Zone, Shri Akshay Modi, to propose a hearty vote of thanks. Akshay Modi, please.
Thank you all. Good afternoon. First of all, I am pleased to share that we have reached exactly 200 participants during this webinar.
Yes.
Secondly, I am thankful to all the associations of Gujarat and Maharashtra for joining in this webinar with the AIFTP Western Zone to make this webinar a huge success. And indeed, we made a huge success. I am also thankful to our National President Shri Narayan Jain ji and Deputy President Shri Samir Jani ji for attending this webinar and giving their precious time. I am thankful to both the speakers, CA Mitish Modi ji and Advocate Bharat Seth ji, for providing such a detailed paper and explanation on the newly amended provisions of Income Tax Act and GST of this finance bill. Lastly, I am also thanking our immediate past president, Advocate Ashvin Acharya ji, for successfully conducting this successful webinar and guiding us while preparation of this webinar. Thank you all for attending this webinar and making it a huge success. Thank you.
Thanks.
Thank you. Only I will add one word, Akshay.
Yes.
You get rare time to appreciate and thank formally to your father. Normally, formally. So you got a chance, and really thank you very much. I'm really proud that you are also doing very well. So I thank everybody.
Thank you, sir.
For attending a large number. Thank you very much.
All the associations, that is the willingness of all the professional bodies to join with West Zone.
Correct.
That we have to appreciate, and we recognize the presence of our Secretary General Kakraji, then our past President Ganesh Purohitji, and opening remarks given by our National President Narayan Jain. Thank you very much for giving us the opportunity. Narayan Jain is there on the screen.
Yes.
Sir, कैसा लगा? पहले तो
आपके साथ रह गया था टाइम का, लेकिन दो मिनट बोल सकते हैं।
टाइम बहुत शॉर्ट रहा, लेकिन सर आपका वर्ड्स ऑफ विजडम
बोलिए सर, 2 मिनट।
अच्छा अश्विन भाई, मैं बोलूंगा यदि समीर जानी जी हो तो 2 मिनट उनसे बुलवाइए।
यस
समीर जानी है,
अभी भी है।
आप हो समीर भाई?
है तो बोल सकते हैं, कोई इशू नहीं है।
समीर जानी जी, if you are,
कोई इशू नहीं है।
He is not.
No, he is left actually.
Okay.
Anyway,
correct.
Friends, I highly admire the deliberations made by both the speakers. I deal with the income tax, and I could see behind the chair of our Mitesh Bhai that he is having my two books. One is Income Tax Planning and Practice. The other book, How to Handle Income Tax Problems. But how to handle income tax problem, I could identify that is of 2001. and this income tax planning and practice is of 2017. 17? Huh? 2023. So I have not discussed much, but because all the associations are here, if you can work out, and these books are very useful in day-to-day profession.
Yes, sir.
So I will arrange special discount of at least 30% from my publisher.
Excellent.
These books, how to handle income tax problem, this year 33rd edition is coming. It's coming for 3 years.
Very good, very good, very good.
The first edition was released by Honorable Dr. Manmohan Singh. Then also by Honorable Pranab Mukherjee sir, Chidambaram sahab, whoever the finance minister one year or the other, they have released it.
Very good.
So, and it contains the messages of our honorable past presidents and the benefit what we get by membership of AIFTP and by attending various conferences is that we get in touch with our past presidents as well as the Supreme Court judges, Chief Justice of High Court, and they always bless in the academic work. And writing book or doing academic work is not the privilege of only a few persons like me. I suggest and request and inspire our other persons like Mitesh Bhai, Bharat Bhai, and others that please share your knowledge through books. It may not be much beneficial so far money is concerned, because for writing books we do not get much money, but the satisfaction you will get is much bigger.
Yes, sir.
Once in the income disclosure scheme, I used to work for Delhi clients also. I went to Delhi to one principal commissioner of income tax who was dealing with the certificate. I requested him, sir, I've come from Calcutta, I've got some clients in Delhi. So I request you to kindly consider and issue this certificate in next 2-3 days. So he said, Mr. Jain, I know you. I met you. So I thought where I have met this gentleman, but I could not recollect. So asking excuse from him, I said that, sir, I don't remember where we have met. So he stood up and went to his cupboard and brought my book. I read your book, and this is how I met you and I keep on meeting you. So, and the certificate I requested for 2-3 days time. I told him that the person who is declaring the income, he is also ex-finance ministry official, and he's sitting outside. So if you kindly allow, he can come inside and discuss with you. So he called him and also offered him tea. He said that by the time both of you have your cup of tea, your certificate will be ready in 10 minutes.
Very good.
I am giving you this example, and
Yes,
that
sir.
this kind of thing has happened with me in the Ministry of Finance in CBDT. There also I got wonderful treatment from the chairman CBDT, member CBDT, the ministers. So I am giving this illustration so that you see, you all should come forward. At least I will be happy that if 5 gentlemen from, ladies or gentlemen from AIFTP start writing the book. First start writing article for newspapers and for AIFTP journal, and then you compile it into a book. That will be very nice. And in course of time, like you see the post in AIFTP or in any organization, there are 11 organizations today with us, that comes and goes. We are looking after that post for 1 year. But the academic work as a writer or as a speaker, that is having a long-term perspective. So please do that. And only 2 points I would like to make. One is Vivad Se Vishwas scheme. This part 2, we should make full use for our clients, and in the process we can get lot of fees. Secondly, the newspapers the reporters, they are missing one point, which I pointed out to a Telegraph newspaper, and they have covered it from Delhi, that the apart from the indexation of cost inflation index, there is a provision in section 55, subsection 2 and clause A, that the real cost can be substituted by the fair market value as on 1st of April 2001, and then indexation. So this point also should be highlighted.
Yes, yes.
And there is a provision in the income tax law, because Mitesh Bhai very well explained the provisions of reassessment and changes in 47, 148, 148A, 151. So whatever number of time we hear the analysis, we all are educated, and this is like you see Ram Nam ka mala ki tarah, jitne baar padhenge sunenge utna अच्छा होगा. So section 152 subsection 2 provides that if we can prove to the satisfaction of assessing officer that the assessment which was made earlier has been rightly done and no income has escaped, then he has got the power to drop the reassessment proceeding under section 152 subsection 2. And in my practice, I have been able to do it in many cases. So these provisions, you see, I am talking of all legal provisions. So we should take care of that. And I wish you all the best, all the members of NEC, office bearers. Ashvin Bhai has conducted it very well. And both the speakers, I need not repeat. You have done very well. And you can think of organizing another program in next 1 week.
Yes.
500. Today you crossed 200. And I think Shashank Bhai and Akshay Bhai, you make the efforts so that next time it is minimum 300.
Thank
you. Tomorrow also please join Girish Avjad's program.
Yes.
And we would like to achieve the target of 500. So please, Mitesh Bhai and Ashwin Bhai, you all got, Shashank Bhai, you got the link. So kindly circulate that link.
Yes.
Definitely.
If there are more than 500 also, we will be accommodating through YouTube. So 500 in Zoom, and if more than 500, we will accommodate in YouTube. So thank you very much. And I am happy that since 9:30 I came to my office and I had occasion to listen to both the speakers. There is a difference in hear and listen. So I did not hear, I listened. I'm not explaining what is the difference between the two. That was taught to me by my gurus, English teachers. So, okay, thank you very much.
Thank you, sir. Thank you, Narayan ji,
Thank
for
you,
your
sir.
encouragement that you encourage that the new person, they must write a book. It has tremendous effect of writing, and so thanks a lot for encouraging all of the professors. Thank you very much. Thank you.
I may add, sir, at the end that you share your reported opinion in the Telegraph and other newspaper.
Yeah.
And I am fond of reading that your article. Every article I read out, because you cover all the landmark decision along with the provisions of the law. That is very important for the day-to-day practice. Even in the litigation practice, it is very much useful. And for us, it is ready material. If some cases are going on, it is ready material from your article. So, sir, we are very much thankful and grateful to you that we have such kind of national president at All India Federation level, sir. Thank you.
My pleasure. I can send to our 11 associations, if you can send the name of the president and his mobile number.
Yes, sir. Yes.
I can add them in the list so that in turn they can circulate among their members.
Correct.
Sir, one more request to give your article for our Tax Gurjari magazine.
Yes, sir.
6 to 7 pages, no size doesn't matter, sir. आपका जो opinion मुझे sir कोई भी important topic.
I will abide by your suggestion.
I have already sent request, sir. I'm a chairman of Tax Gurjari.
Thank you, sir. Bharat Bhai is also very learned, so he should also think of writing a book. Already you written. You write more.
I have already written 11 books. 11.
Oh, excellent.
In VAT and GST. In English and in Gujarati, vernacular language.
Achha. Good.
Thank you, sir.
Okay, thanks a lot. Thank you, everybody.
Thank you, sir.
Thank you.
Thank you. God bless.
Thank you, everyone.
Okay, thanks to all.
Thank you, Shashank.